My name is Mamoru Endo, and I'm today's MC for this webinar. This is the fifth of the African Development Bank's webinar series on debt management. If you're participated in the previous webinar, welcome back. If you are joining for the first time, we're glad to have you with us. Thank you all for taking time out and being here today. Today's webinar discusses lessons on sustainable borrowing policy implementation. I will briefly take you through today's agenda. We have welcome remarks and opening remarks. After that, we move to the main part, presentation of the debt sustainability assessment. After that, we have presentation of debt dynamics and improvement debt sustainability by the bank. After that, Q&A follows, and we will conclude by closing remarks. Now, allow me to go through a few housekeeping points before we get started. This webinar has simultaneous translation service for French and Portuguese other than English. Kindly pick your comfortable language at the bottom of the window. As for Q&A session, we will do it after both session 1 and session 2 finishes. And if you have any question, please type them into the question box in your control panel. Those questions will be answered during Q&A session. At the end of the webinar, please help us by answering to a little survey. It will appear on your Zoom screen. We appreciate your kind cooperation. We have a dedicated website for this webinar series in the AFDB official website, which archives all the information, including the previous webinar recordings. You can visit there and learn more about what we have discussed in the debt management topic. Once again, welcome to today's webinar. Now we begin. First, we would like to hear welcome remarks on behalf of the organizer. I would like to introduce Mr. Abdoulaye Coulibaly, Director of the AFDB Governance and Economic Reform Department, ECGF. Mr. Coulibaly, the floor is yours.
Thank you very much, Mamoru, and distinguished colleague. Thank you very much for joining us this morning. We are really happy to have all of you for discussing this thematic, which is very important for the bank. I'm going to make my introduction in French. I hope that the translation is working very well. Now, just take, as Mamoru indicate, just 1 minute to select your preferred language to be able to receive, I think, the information in the desired language. Madame, Monsieur, bonjour. Mon nom c'est Coulibaly Abdoulaye. Donc, au nom du VP Kevin Ouramo, économiste en chef, vice-président du complexe de la gouvernance économique et financière.
Monsieur Coulibaly, excusez-moi, je pense que vous avez cliqué sur interprétation anglais à votre niveau. Donc, allez sur interprétation et prenez original audio pour éviter que vous entendez l'interprétation.
Voilà, exactement. Juste une seconde parce que je reçois le français en fait.
Oui, oui. Allez sur interprétation, mettez-vous sur original audio.
OK, parfait. Merci beaucoup. Désolé pour ça. Voilà, merci beaucoup. Voilà, donc, encore une fois, bonjour et je vous souhaite vraiment la bienvenue. Monsieur Takahiro Suda, directeur division des banques multilatérales de développement, Bureau international, ministère des Finances du Japon. On est très heureux de vous avoir ce matin. Encore une fois, je pense que c'est la 3e fois qu'on a le privilège donc, de recevoir la coopération japonaise, en particulier le ministère des Finances, qui est notre partenaire stratégique pour cet événement. Donc, je voudrais vraiment en profiter pour saluer cette coopération et vous remercier pour tout le soutien que vous apportez à la Banque africaine de développement, et en particulier sur cette question importante qui est la question de la gestion de la dette publique des pays membres régionaux de la Banque. Madame et Messieurs, représentants des pays membres régionaux, nos partenaires donc des institutions internationales, chers collègues, représentants de la société civile, au nom de la Banque africaine de développement, Je suis vraiment ravi de vous accueillir ce matin chaleureusement à l'occasion de cette 5e édition de la série de webinaires sur la gestion de la dette de la Banque africaine de développement, organisée en collaboration avec l'honorable gouvernement du Japon. La discussion d'aujourd'hui intitulée Enseignement sur l'empreinte durable et la mise en œuvre des politiques publiques est d'une importance capitale compte tenu des défis sans précédent auxquels notre continent est confronté. En effet, dans le sillage des défis actuels de la dette souveraine en Afrique, exacerbés par la confluence des chocs mondiaux, tels que la pandémie du COVID-19, l'invasion de l'Ukraine par la Russie et les crises liées au climat, la Banque africaine de développement a été à l'avant-garde pour répondre à ces préoccupations. Ces webinaires visent à approfondir les questions de politique publique et la mise en œuvre des politiques d'empreinte durable de la Banque, en utilisant l'Angola, le Mozambique et la Zambie comme étude des cas. Ces pays dont les structures économiques, les trajectoires d'endettement et les caractéristiques institutionnelles sont différentes, fournissent des indications précieuses sur la manière dont vous pouvez naviguer dans le paysage complexe des vulnérabilités de la dette. L'augmentation du fardeau de la dette en Afrique a conduit à une vulnérabilité accrue de la dette, avec un nombre croissant de pays en situation de surendettement ou à haut risque de surendettement. Le resserrement des conditions financières mondiales, la dévaluation des monnaies et divers chocs extérieurs ont encore réduit les budgets des gouvernements, limitant leur capacité à investir dans les domaines cruciaux tels que les soins de santé, l'éducation, les infrastructures nécessaires au développement. Reconnaissant l'urgence de la situation, la Banque, en accord avec les principales institutions multilatérales, a approuvé la politique d'empreinte durable. Cette politique vise à améliorer la transparence de la dette, la gestion fiscale et la coordination entre les pays membres régionaux en mettant l'accent sur ce qui représente un risque élevé ou modéré de surendettement. La vulnérabilité de la dette est devenue une préoccupation de plus en plus urgente, marquée par un ensemble complexe de défis qui menacent la stabilité économique et le développement des pays du continent. Les causes multiples de la vulnérabilité de la dette en Afrique sont enracinées dans le resserrement des conditions financières, caractérisées par des hausses de taux d'intérêt aux États-Unis et en Europe, ainsi que l'affaiblissement des monnaies nationales par rapport au dollar américain. Ces défis soulignent l'urgence de trouver des solutions durables, ce qui nécessite une approche globale comprenant l'harmonisation des politiques, l'amélioration de la transparence de la dette et des efforts coordonnés pour favoriser un environnement propice à des empreintes durables et au développement économique des pays de la région. Une partie de la discussion sur la viabilité de la dette, en particulier en ce qui concerne les différentes parties prenantes, nécessite une discussion sur le recentrage des notations de crédit, la facilitation du financement des pays en développement et la transformation de l'architecture financière mondiale afin de traiter les pays africains de manière plus adéquate. Pour finir, alors que nous nous réunissons pour tirer les enseignements sur les empreintes viables et la mise en œuvre des politiques publiques, il est impératif que nous considérons les implications plus larges de la dynamique de la dette, des taux d'échange et des fondamentaux économiques. Les résultats de nos discussions d'aujourd'hui ne sont pas simplement théoriques. Ils sont des éléments constitutifs de politiques réalisables qui aideront les pays à améliorer donc la gestion de la dette en l'avenir. J'encourage chaque participant à s'engager activement dans les discussions, à partager des idées précieuses et à contribuer à la formulation de solutions pratiques et des recommandations politiques. Ensemble, nous pouvons ouvrir la voie à une gestion durable de la dette, garantissant un avenir plus radieux et plus résilient à notre continent. Je vous remercie et je me réjouis de ce séminaire soit fructueux. Je vous remercie beaucoup pour votre assistance. Mamoru, j'ai le plaisir de vous retourner la parole. Et encore une fois, merci beaucoup d'être là, nombreux ce matin. On est presque 200. Et je pense que compte tenu de l'importance du sujet, on est vraiment heureux qu'on ait autant de personnes ce matin. Et encore une fois, on vous remercie beaucoup de prendre 2 heures de votre temps pour partager vos idées et puis avoir ces échanges fructueux ce matin. Merci beaucoup.
Thank you very much, dear Abdoulaye. Thank you very much for your welcome remarks. Next, We would like to invite Mr. Takahiro Tsuda, Director, Multilateral Development Banks Division, International Bureau, Ministry of Finance of Japan. Mr. Tsuda, thank you very much. Floor is yours.
Thank you very much, Mamoru. Distinguished speakers and guests, ladies and gentlemen, it is my greatest pleasure to deliver this opening speech at this webinar. I'd like to thank all the participants, in particular Abdoulaye, Mamoru, and the team who worked diligently on this project. As we all know, Africa has tremendous potential for economic growth, with its rich national resources, growing population, and rapid urbanization. Real economic growth on the African continent is forecast to be 4.1% in 2023 to 2024, outpacing the global economy, according to the latest African Economic Outlook. At the same time, development needs remain elevated in various areas, such as infrastructure investment, human capital, and climate change. Before addressing these issues, however, we must address one formidable challenge, which is growing debt vulnerabilities. The debt to GDP ratio in Africa has increased from 50% in 2015 to 65% in 2022. The presence of private creditors and non-Paris Club bilateral lenders has also risen, increasing the cost of borrowing and the risk of sudden stops. While the elevated level of debt itself may already sound alarming, the underlying structural challenges should deserve further attention. Despite a series of debt relief, like the HIPC initiative or MDRI, why does the debt level remain elevated? What are the fundamental causes? It has been widely acknowledged that the major debt bottlenecks in Africa includes weaknesses in governance. Without the right governance in place, countries would borrow without clear forward-looking plans, or no international institutions could borrow without clear, or no international institutions could track the borrowing activities if there was a lack of transparency. Specific progress can be observed under the World Bank IDA's Sustainable Development Finance Policy, or SDFP. Out of 39 African IDA countries, 25 countries have published their performance on the policy actions that include debt management plans. However, with a surge of non-concessional lenders, the debt management offices of African countries need to build more capacity to be more strategic and agile. To tackle these challenges, multifaceted collaboration is warranted. While the World Bank and the IMF establish globally applicable standards, the African Development Bank should play a leading role in advising regional countries as a trusted partner for Africa's governments and regional institutions, or resident doctor in the region. More specifically, the African Development Bank has reinforced its engagement with and support for African countries in addressing debt vulnerabilities. Central to such efforts is the bank's sustainable borrowing policy, aiming to support African countries towards debt sustainability while ensuring complementarity, harmonization, and coordination with the World Bank's SDFP and IMF's debt limit policy. Agreed policy actions under the SBP are key milestones in the dialogue between the bank and the client countries, as well as reference tools for specific technical assistance. We hold high expectations for more ambitious implementation of SBP going forward, given enhanced debt management as well as public investment and the revenue mobilization is an integral part of the bank's 10-year strategy, which is expected to be launched next year. Last but not least, let me highlight Japan's contribution in this area. The fifth phase of the Enhanced Private Sector Assistance for Africa, or EPSA 5, includes a special window of up to $1 billion that supports countries that are engaged in reforms for enhancing debt transparency and sustainability. Also, Japan has supported the various activities that contribute to strengthening the continent in building capacity through its trust funds, such as FAPA or PHRDG. We look forward to the AFDB using these funds strategically for augmenting its policy efforts. At today's seminar, we will learn how we can explore the policy issues in SBP while drawing lessons from 3 sub-Saharan countries on how they have responded to debt crises. I hope that today's discussion will shed light on how to mitigate the risk of debt vulnerabilities. I look forward to a lively discussion in the following sessions. Thank you very much. Back to you, Mamoru.
Thank you very much, Mr. Tsuda. Thank you so much for the very encouraging opening remarks. Thank you so much. So now, this opens the main part of today's webinar with no further delay. Before moving it, I would like to welcome again those who just joined this webinar. You can post your questions via Q&A box, which you find at the bottom of Zoom window anytime during the presentation, panel discussions, and Q&A session. Those questions will be answered during Q&A session. Now, I would like to introduce the moderator of the main session, Mr. George Kararach. George is lead economist of the Country Economist Department of the African Development Bank. George will guide us through the entire sessions. Thank you very much. The floor is yours, George.
Hello? Hi. Hello?
We are hearing you, George.
Okay, so the thing has just disappeared. I don't know why I have so multiple screens. Can I log out and log in again? I have so many screens that cannot make sense out of this. Huh? Let me do that.
And we can see you.
We can see you, George.
Okay, let us give you 1 minute to George. Yeah, George, you are on the screen. We are hearing you.
He got disconnected.
Sorry for that. Mamoru, I think we...
Yes.
Yeah.
Thank you very much. George is now reconnecting to this site, so kindly be patient just a few moments. Thank you so much, everybody.
Mamoru, we may
yes, probably.
George if George has some issue.
Yes, so probably just taking this time, we would like to begin the first session presentation by Mr. Juan Jose Kadiri. Mr. Juan, are you here with us?
Yes, of course. Ready to start.
Okay. Thank you very much. So thank you. He's the consultant to our study on the debt sustainability in southern region of Africa. So probably the George is trying to reconnect, but just taking this time, please, Juan, go ahead with your presentation. So please give us your findings from this study. Thank you very much, Juan.
Thank you very much. Mamoru, if you, yes, kindly allow me to share my screen. So good morning, good afternoon, good evening to everyone. I want to start off thanking Mr. Coulibaly and his team at the governance global practice in the African Development Bank, as well as all the organizers of this conference, to give me an opportunity to participate and share with you the key findings of the study on public debt sustainability and management that was carried out in the first half of 2022, and with the objective of bringing to light progress made in improving debt management capabilities in 3 selected African countries, namely Angola, Mozambique, and Zambia, and also to highlight the challenges to restore debt sustainability in the aftermath of the pandemic in these 3 countries as well. The objective of the study, although focused on Angola, Mozambique, and Zambia, was to bring issues that could be pertinent, relevant for all the constituencies in the African Development Bank. In my presentation, I will emphasize a few elements of our assessment. I will take advantage that we have representatives from the governments of these 3 countries that will deliver their remarks, observations, or even presentations after me. So I will minimize my own speech for the sake of having these representatives sharing with us the, of course, much deeper knowledge and interesting experiences that they can share with us concerning how to manage public debt when the debt levels get to a point in which sustainability risks become a concern. So the content of my presentation includes a few words on recent macroeconomic trends, then some highlights on the debt sustainability analysis that we conducted for Mozambique, Angola, and Zambia, a few observations on the debt management institutions, operations in these selected countries, some common themes and a regional perspective, and policy recommendations. Quickly, the recent macroeconomic trends that matter for our study were not those we observed today towards the end of 2023, were those prevailing at the beginning of 2022, when we were just leaving the pandemic behind. As you know well, the pandemic implied a significant contraction in economic activities, growth slowed down, or absolute reductions in the levels of real GDP. Africa as a whole suffered a contraction in 2020, which was small in an international comparison. In 2021, we observed a strong recovery in most regions, Africa being one of the most successful in restoring the levels of real GDP that were observed before the pandemic in 2019. Now, during the pandemic, African countries in general struggled to provide an active fiscal policy. The fiscal deficits for the African region as a whole in the year 2020 were just 2.7 percentage points of GDP larger than in 2019, that is before the pandemic, while the use of active fiscal support was much stronger in other regions of the world. Now, not only because of the pandemic reducing the GDP and leading to larger deficits, but also because of the pre-pandemic years in which there were significant growing fiscal imbalances and debt levels, the debt level situation in several African countries, particularly in the poor countries that are the object of the low-income country debt sustainability framework, there were significant concerns about sustainability. In the league DSF, there were many countries that were already in the distress or facing a high risk of debt servicing difficulties in the next few years. one important point when we prepared our study, again in the first half of 2022, was the uncertainty about the recovery in the post-pandemic world. African countries were expected to recover with a lot of heterogeneity across the different sub-regions of the continent. And something very important to remember is that by the first half of 2022, many of the developments of the recent trends that occurred since then to the present were not anticipated. The extent and the persistence of the rising interest rates, the turmoil in commodity energy markets, the geopolitical tensions, including the conflict in Ukraine, all these developments that were established today, towards the end of the year 2023, were very incipient when we conducted the study. So there was a lot of uncertainty about the pace of the post-pandemic recovery. In this context, we look at the debt sustainability prospects for Mozambique, Angola, and Zambia. We utilize standard debt dynamics analysis to conduct projections for the key economic, fiscal, financing, and variables that drive the public debt, in particular the public debt to GDP ratio as a widely used indicator of debt sustainability. In the case of Mozambique, for instance, by the end of the year 2021, which was the reference for our study, the debt level had reached 102% of GDP. And according to our projections, at the time the study was conducted, the prospect for sustainability were quite acceptable. The debt to GDP ratio was expected to decline over time and reach the level of 61% by 2027. These gains in sustainability, implicit in the gradual reduction of the debt to GDP ratio, were expected out of strong GDP growth, negative real interest rates, and primary surpluses. This, however, almost a year and a half after the completion of the study, we can observe that the trajectory for the debt of Mozambique in future years does not look as rosy as it seemed to us when we conducted the study. So in the chart, you can compare the blue line, which was our projection in the study, with the red line, which is the most recent IMF World Economic Outlook forecast for the gross debt to GDP ratio in Mozambique. And as you can see, the levels of the debt that are projected for Mozambique by the IMF, admittedly, as of today, are slightly higher than what we thought 1 year and a half back when the study was conducted. For Mozambique, we also analyze the composition of the debt in order to get a sense of the cost-risk profile. As you know well, debt sustainability is about the levels of debt relative to a repayment capacity of the government and is a forward-looking analysis. But we also look at the debt from the perspective of the exposure to cost and risks. And for that, the composition of the debt by residency of creditors, lenders, financiers, investors, or by currency, by type of interest instrument, by type of interest rate is quite relevant. So in Mozambique, the key points that I want to emphasize was the importance of external liabilities, the heavy exposure to currency risks, since 3/4 of the debt were denominated in foreign currencies, and only 1/4 was denominated in medical. and the importance of the fixed rate in the debt portfolio. Finally, in our study, we conducted assessments of risks to which the Mozambique public finances could be exposed to. And in particular, we carried out a sensitivity analysis that highlighted the most important risks facing the Mozambique public debt were a slowdown in economic recovery, which actually was observed eventually in 2022 and 2023, the depreciation of the local currency, and difficulties to mobilize resources, increase government revenues, and gradually reduce the fiscal deficits. Now, turning to Angola, at the time of the study, the debt levels were around 86% of GDP. And based on the projections at that time, also a gradual improvement in the debt to GDP ratio was expected over the next few years. By 2027, it was expected that the debt to GDP ratio will be just 37%. And the main drivers of this significant reduction projected in the debt to GDP ratio were again primary surpluses, negative real interest rates, and the cancellation of the regular operations to grant guarantees. Remember that the public debt statistics metrics that we are looking at is the PPG debt, is the public and publicly guaranteed debt. Now, a year and a half after the study was concluded, the IMF today has a very different outlook with respect to the public debt in Angola. From the very beginning, by 2023, the IMF is expected that the debt to GDP ratio is going to be 85%. That is the level that it had by 2021, and is expected to decline to just 50 to 54% by 2027. So again, the revelation of those uncertainties that we had when the study was conducted led, unfortunately, to a revision of the debt to GDP ratio projections that looks less rosy than it did when we finished the study. As for Angola, when we look at the composition as opposed to the level of the debt, we also find a significant share of external debt and a significant exposure to currency risk in view of more than 3/4 of the public debt being denominated in foreign currencies. And what was interesting for Angola, as well for Mozambique, was the increasing shares of Eurobonds and marketable debt. In the case of Angola, the Eurobonds represented 12% of the debt by 2021, and the commercial debt was nearly 33%. We also analyzed the risk to the sustainability prospects and found similar results compared to Mozambique. Namely, the slowdown in post-pandemic recovery could increase the debt levels above the baseline scenario. In particular for Angola, the volatility of oil prices and production was an important source of risk. And the sensitivity of the marketable debt to interest rates made the global interest rates a significant factor affecting debt sustainability. And in fact, the hike in global interest rates during and after the study was conducted brought this problem, this risk exposure to light. On Zambia, our debt sustainability analysis started with a level of 122% of GDP in the public debt by 2021, and we expected it to gradually decline to 95% by 2027. The main drivers, similar to the other countries, would be the economic growth in the post-pandemic recovery, negative real interest rates, And similarly to Angola, the expectation that the policies to grant guarantees will be discontinued over time. Now, 1.5 years after the study was concluded, the current outlook for debt in Zambia is slightly different. And I am glad that we will have one official from the Zambian Debt Management Office presenting the case. I just want to mention that the WIO is very cautious. The IMF is very cautious when projecting the Zambian public debt. In the October 2023 WIO, there is no projection. There is no projection for Zambia's public debt. It's just an estimation of the levels in 2021 and 2022, which, by the way, are below the levels that we consider in the study because of the debt relief operations in place. But there are no projections for the Zambian public debt for the period 2023-2027. In terms of the structure, Zambia public debt is also largely external. Differently from Angola and Mozambique, the share of local currency debt is much higher, is in the order of 46%. And therefore, the currency risk exposure is relatively narrower. And similar to the case of Angola, there is a significant presence of marketable debt, including bonds and including bonds and T-bills. Zambia was also subject to risks that could elevate the debt to GDP ratios relative to the baseline projections, including the slowdown in economic recovery, higher global interest rates in view of the significant share of marketable debt, and the currency depreciation. Now, while the analysis thus far focused on the levels of debt, the prospect in the future for those levels of debt, and the structure of the debt in terms of exposure to cost and risk, our study also look at the institutional aspects of concerning debt management. And the study focused on 4 areas: the practice of conducting MTDS and annual medium-term debt management strategies and annual borrowing plans, the type of borrowing instruments that are regularly utilized for the government to raise finance, what is the policy and practice concerning the granting of guarantees on lending operations and other debt-related transactions, and finally, how is the coordination between debt management policies and overall macroeconomic policies, including fiscal, monetary, and exchange rate policies. For each of these 4 items, we carried out an assessment of the situation in the 3 countries that we were focused. The analysis was informed by a number of interviews that we conducted with government officials working for the debt management offices in Mozambique, Angola, and Zambia. Now, let me emphasize that the findings were those corresponding to the first half of 2022. And I am happy to report that since the conclusion of the study till the present, that is, in the last 1.5 years, a significant number of improvements have been made in the debt management offices of these 3 countries. Of course, challenges remain. Of course, there are still weaknesses. Of course, there is room for improvement. But it should be recognized and praised that gradually there are improvements that are material and can assist the governments of these countries to manage their admittedly very high levels of debt. And of course, some of these improvements are to be attributed to the efforts made by the public officials working in the debt management offices, and the assistance, technical and financial, that they have received from institutions like the African Development Bank, but also the IMF, the World Bank, and other international and regional development partners that do their best to raise the capabilities, technical, institutional, operational, of debt management offices. Let me, for the sake of time, jump the analysis of the three countries and go directly to the findings that have a more of a regional relevance. And I'm doing this because time is scarce, and also because we will have representatives from these three governments, of some of these governments, that can give you the most updated description of the situation in terms of debt management capabilities. So the policy recommendations that our study formulated, looking at three cases, three countries, but having a regional, a continental view in mind, were the following. Concerning the medium-term debt management strategies and the annual borrowing plan, of course, the recommendation is to have countries conducting MTDS in order to have a good understanding of the market risk associated to the existing public debt stock, envisage the future macro-fiscal environment in which the governments will have to raise finance by issuing T-bills, T-bonds, by contracting loans with external creditors, even by floating Euro bonds or other global bonds. Together with the MTDS, it's important to have an annual borrowing plan that lays out the tactics, the specific issuances, volumes of finance to be raised, and an expectation of short-term market conditions corresponding to a budget cycle, that is a one-year budget cycle. As for borrowing instruments, the main recommendation is to continue developing the local debt markets, as Zambia did. By local debt markets allow countries to borrow in local currency and mitigate foreign currency risk, allow them to mobilize domestic savings and give them a useful investment vehicle to apply the funds, and it helps the overall development of the domestic financial system. We also see as a recommendation that governments that intend to issue securities in global markets, like in Eurobonds, global bonds, should receive a lot of assistance, of technical assistance, because a number of African countries are still transitioning from the traditional financing model based on concessional, semi-concessional lending through loans to a more market-based financing scheme in which bonds, particularly external bonds, are issued regularly. That transition requires to build up significant capabilities, and countries that aspire to be frontier markets and have international issuances should receive significant technical support. Similarly, those that want to introduce marketable debt securities in domestic markets. On guarantees on lending and debt-related transactions, the study recommends to have a more clear legal framework and regulatory framework governing these very specific transactions that can carry out a lot of risks when the commitments, the future commitments that the government may be liable to assume in case contingencies realized are quite significant. So improving the legal framework for the approval of these transactions and making the transaction transparent by publishing documents that explain the policies and inform what type of the transactions are being carried out as guarantees on lending, etc., it's very important. Finally, on the coordination with macroeconomic policies, this is an area in which no effort is ever enough. The coordination between borrowing activity, fiscal policy, monetary policy, and exchange rate policies is extremely important. And the study recommends to build up task forces to have a regular monitoring of the macroeconomic and financial conditions in abroad and domestically. It is recommended to have a coordination between the issuances of the treasury to raise funds and fund the budget, and any issuance or monetary policy transaction carried out by the central bank for monetary regulation purposes, etc. So it's very important to have the different policies coordinated and a collaboration between the Debt Management Office, the macroeconomic and fiscal policy units in the Ministry of Finance, the central bank, associations of domestic creditors, including banks or other financial intermediaries, and the communications, the stock exchange, in case the government securities are traded on a public platform. The coordination among these agencies is essential. Let me conclude here my presentation. I think I took the 20 minutes I was allocated and open the room for further discussions. Thank you.
Thank you very much, Juan. I would like to hand over to George, who is the facilitator of this session. George, can you open your the video?
Can you hear me?
Yes, I can hear you.
Yeah, but, okay, thanks, Juan. So let me invite Dr. Teixeira from Angola to give us a sense of the example of measures that was taken in Angola to deal with the issue of debt and the recovery plan for debt sustainability.
Muito obrigado, Jorge. Muito obrigado, todo mundo que nos ouve. Acho que o tema que temos aqui, acho que em discussão é, de facto, veras importante e atual, tendo em consideração as circunstâncias que os países africanos vivem nesse contexto mais difícil, ou seja, mais difícil do ponto de vista do financiamento para as economias emergentes, em particular para as economias africanas. Angola já está, digamos assim, desde 2018 a implementar uma série de reformas, né? Nós tivemos a oportunidade e digamos assim, a boa parceria, a oportunidade de ter bons parceiros, e acho que o trabalho que Angola fez durante o programa com o FMI e o Banco Mundial permitiram-nos antecipar algumas das circunstâncias que estamos hoje a viver. Dizer que na altura, em 2018, nós estávamos a falar, Angola estava numa circunstância em que a dívida era muito alta. Estamos a falar de um rácio dívida-PIB a rondar 71%. Nós conseguimos, mesmo durante o programa, sentimos a deterioração deste rácio dos 71% para os 112% em 2020, mas em função das reformas duras que foram implementadas, contenção de despesa, limitação de empréstimos comerciais, optar por empréstimos com termos mais concessionais, permitiu-nos em 2021 começar a reduzir essa rota, né? Sentimos a redução do rácio dívida-PIB dos 112% para os 86%, chegou em 2022, no final do ano, a rondar os 63%. Em 2023, como já foi aqui referido, as condições macroeconómicas a nível do mundo alteraram substancialmente. A situação geopolítica teve a sua influência, por um lado. Por outro lado, tivemos um melhor aporte do ponto de vista do preço do petróleo, mas internamente, do ponto de vista da componente da produção petrolífera, tivemos alguns constrangimentos que limitaram o nosso acesso, digamos, à moeda fora, o que fez com que nós internamente, evidentemente, tivéssemos que nos reposicionar e focar nossas baterias para a estabilização daquilo que era a execução do orçamento no ano, né? Isso fez com que, de certa forma, se acompanhasse uma ligeira depreciação da moeda em Angola e que fez com que o nosso rácio voltasse a subir para os níveis dos 80%. Ou seja, nós esperamos terminar o ano com o rácio mesmo em linha com o estudo que foi aqui apresentado, dos 85%. Porém, a situação, podemos dizer que a situação não é assim tão má. Não é assim tão má porque nós olhamos o elemento em duas perspectivas. Se formos olhar, por exemplo, em 2018, do ponto de vista de estoque, nós estávamos com um estoque de dívida em cerca de 75 mil milhões de dólares, né? Nós conseguimos, porque os mercados internacionais não é que não estejam disponíveis, pelo menos da conversação que vamos tendo com muitos players internacionais e os roadshows que vamos fazendo, no deal roadshows que vamos fazendo ao longo do tempo, ao longo dos anos, para garantir que os investidores internacionais estejam ao corrente do que é que se passa do ponto de vista da economia, a economia angolana. Nós vamos recebendo um feedback de que o mercado está disponível para o risco Angola, mas o facto é que os termos de financiamento não seriam justos face ao sacrifício que Angola foi feito ao longo desse tempo. E a esse nível, como eu dizia, o estoque de dívida diminuiu dos 72 mil milhões de dólares em 2022 para 65 mil milhões de dólares. A expectativa é que talvez até o final do ano fique nos 63 mil milhões de dólares. O que quer dizer que, de certa forma, Angola à medida que o tempo vai passando, tem vindo a alavancar a sua exposição ao mercado externo. Nós, durante esse tempo, e com base na estratégia de endividamento, o triênio da estratégia de endividamento de 2022-2024, nós aprovamos 3 pontos específicos para nortear a nossa atividade. Um primeiro tem a ver com o fomento do mercado doméstico e o alargamento da maturidade dos empréstimos no mercado interno. Nós achamos e concordamos que é importante para as economias africanas garantir resiliência interna, ter um mercado financeiro forte que permita que não só o Estado, mas também como os players privados consigam beneficiar, consigam utilizar esse instrumento como ferramenta de alavancagem da economia. No mercado local, pelo menos em 2021, quando começamos a implementar a estratégia, nós tínhamos uma dívida muito concentrada nos três anos logo a seguir, digamos assim. Basicamente, a dívida está concentrada em 2021, 22 e 23. Nós conseguimos implementar um conjunto de alterações no nosso sistema de emissões em mercado primário, que permitiu-nos promover a introdução de 3 operadores preferenciais, ou primary dealers. E criamos também uma série de alterações que aumentaram a competitividade no mercado local. Isso permitiu-nos criar, pela concorrência, criar condições para, pela primeira vez, Angola conseguir emitir títulos de dívida a 10 anos. E essa escalonar, essa janela que se abriu, permitiu-nos nivelar um bocadinho mais, reduzir a pressão que tínhamos do ponto de vista do mercado interno nas emissões de dívida. Associado a isso, começamos a emitir também benchmark bonds, ou títulos de referência, que permitem fazer o seguinte, concentrar emissões e fazer com que essas emissões sirvam de referência para a precificação das emissões futuras em mercado primário. Isso tem de facto resultado numa maior dinâmica no mercado secundário dos nossos títulos. Só para dar uma noção, os títulos, vou dar um número em kwanzas, depois poderei partilhar as referências em dólares. Estamos a falar de Angola passou de um mercado em 2022 de 1 trilhão de kwanzas para 6,5 trilhões de kwanzas para em 2023. Isso falando em novembro. Estamos a dizer que houve um crescimento de cerca de 400%, né? É um crescimento grande e resultante daquilo que foram as iniciativas que nós implementamos. O segundo eixo que nós, do ponto de vista de estratégia, nós implementamos teve a ver com a captação, a continuidade de captação de financiamento semicondicional. Nós criamos uma estratégia em que financiamos nossos projetos utilizando os financiamentos subcondicionais do Banco Mundial, o Banco Africano de Desenvolvimento e outras instituições com o mesmo cariz multilateral. Para quê? Para permitir-nos ter acesso às infraestruturas, mas dar-nos tempo para garantir pelo menos de 3 a 5 anos para a implementação do projeto e cerca de 10 anos de reembolso para permitir-nos efetivamente implementar as infraestruturas e dar-nos tempo de gerar o impacto do ponto de vista do crescimento económico, dar-nos folga para depois reembolsar essa dívida com um bocadinho mais de parcimónia, com um bocadinho mais de leveza, né? Mais de leveza. E o terceiro eixo tem a ver com a gestão ativa da dívida de passivos. Nós notamos que, à semelhança acreditamos que alguns países da nossa região também vivem o mesmo tema, que é nós temos a tendência de viver, de olhar para a dívida e esperar que os fluxos, né, do serviço da dívida vão chegando e lidamos com eles à medida que eles vão acontecendo. Nós temos estado a fazer ter uma abordagem um bocadinho diferente e fizemos o primeiro ensaio em 2022 com a nossa última emissão de Eurobonds. Nós fizemos uma emissão de cerca de 1,7 mil milhões de dólares e desses 1,7 mil milhões de dólares, cerca de 700 milhões de dólares foram utilizados para recomprar a dívida a vencer em 2025. Isso permite-nos nesse momento, estar um bocadinho mais sossegados relativamente ao serviço de dívida que vencerá em 2025 relativamente ao mercado internacional Eurobonds. Utilizamos a mesma perspectiva para fazer as mesmas iniciativas no mercado interno e conseguimos, de certa forma, alterar o perfil de dívida para garantir que efetivamente nós conseguimos pagar esse serviço como de uma forma mais ligeira. Ou seja, em suma, digamos assim, não querendo roubar muito tempo, esses são os elementos que têm norteado a nossa estratégia. Nós fizemos o balanço da estratégia agora no final de novembro e vamos agora reformular a estratégia, fazer um update da estratégia para 2024, 2026 e a nossa perspectiva é, com um balanço positivo que tivemos da implementação da estratégia nestes últimos 2 anos, é sermos um bocadinho mais agressivos para tentar fomentar o mercado doméstico, nivelar o nível de exposição que temos no mercado internacional para garantir que efetivamente tenhamos 2 janelas de exposição e que elas sejam equilibradas, de modo a garantir que a nossa economia esteja mais resiliente a choques externos como estamos a viver nesse momento. Muito obrigado e coloco-me à disposição para qualquer pergunta e resposta. Obrigado.
Thank you, Dr. Dexera. May I ask Secretary Nkulukusa from Zambia to respond on the recent experience, and can you share your key lessons from Zambia on that sustainability process that you guys embarked on? Thank you.
Thank you very much. And if you could allow, you could allow me to share this.
I think there's a network issue. I see. Okay, I think we can hear you now. I think there's a connectivity problem. We can try, let the panelists try to reconnect, and then so we can.
Let me just speak to the issues that I wanted to raise. First, of course, the background to our debt problem has got different challenges that we face. The first one, obviously, in our economic development agenda, we embarked on the Vision 30 way back in 2005, and we talked about ensuring that we have economic stabilization, which we achieved by 2011, and then we embarked on infrastructure development to open up the economy for production and trade. And obviously, the ambitious program for infrastructure development meant accumulation of external debt. We also saw economic challenges. Inflation was rising, economic growth was slowing, and there were insufficient domestic revenues, thereby limiting the fiscal space that we had. And in 2019, we had the COVID-19 that basically came and worsened the already precarious economic situation we had. And this obviously caused us the challenge to service the debt. And because of that challenge, in 2020 March, we started the process and we applied to have an economic program with IMF. The IMF extended credit facility. In February 2021, we made an application for debt treatment under the G20 Common Framework. And coming to June 2022, we had the formation of the Official Creditor Committee and an approval of a 38-month ECF program with the IMF was in August 2022. And then we went up to 2023 June for us to have the debt restructuring agreement with the official creditor committees, with the memorandum of understanding agreed with the official creditors in October 2023. So while we are engaging with the official creditors, and now we have an MOU that was agreed and is undergoing signing, we also have been engaging with the bondholders and the other commercial creditors. With the bondholders, we had an agreement in principle that was agreed in October 26th, which then we subjected to the IMF and the OCC to check with the compatibility with the DSA parameters and comparability of treatment with the official creditors, respectively. After the assessment of the agreement, both the IMF and the official committee said that the agreement was not compatible and went back with the submitted a revised proposal that made compatibility with the DS parameter under assessment, but the OCC assessment in terms of the comparability of treatment. Obviously, one of the things, and these are the lessons that we bring, and for Zambia, we bring the lessons. Obviously, we haven't been the first country to go through the process, and for Zambia to have the commitment assurance from the time we applied for the common framework it took us about 9 months. We are told that it took Chad about 11 months. We are told that it took Ghana probably about 6 or 5 months. And we are hopeful that for the rest of the countries that will come after us, it will take a shorter period. Up to now, I think there is still the question of what does this comparability of treatment mean? How do we interpret it? Is it interpreted different by different players? And how do we make sure that we reach this? In terms of the experience that we have seen as Zambia, one is the issue of the participation and the inclusivity. And here we see that the official creditor committee consists of the official bilateral creditors who are certain the extent of the debt relief required. Private creditors, on the other hand, do not participate in the common framework processes, and therefore we have seen that in most cases they are not able to weigh in on the resolutions, but are expected to align under the comparability of treatment principle. Terminologies such as comparability of treatment do not have one agreed upon definition within and outside the official creditor committee, and we've seen this challenge even when we sit under the sovereign debt roundtable. We are still looking at, well, how do we define this? One issue that I talked about is the timelines. There are no timelines to the process, and the lack of timelines means that obviously you cannot be able to say when is what expected to be achieved. And because of the lack of timeline, some processes will take longer, and therefore it will affect the market confidence and the performance of the economy in the country. And in the Zambian case, obviously, the longer that this has taken, we have continued to accrue debt service arrears. We have fluctuating investor confidence, and therefore, this has caused some delays in the substantive economic recovery and delivery of development projects that we anticipated to be undertaken. In terms of creditor coordination, obviously the OCC coordinates bilateral creditors only, and on official platform, bringing all players on the board is yet to be established. Initiatives such as the Global Sovereign Debt Roundtable need to be developed to internationally recognized standards and to be able to be ahead of the processes that are coming behind. Debtor country is left out to coordinate private creditors who most often than not take up a wait and see, stand by the fence position, thus delaying the process. And the last one that I wanted to share as one of the experiences we have seen is that there is lack of clarity on the processes that we have seen. In terms of the lessons that other countries could learn from us, and I think I want to repeat most of what Joan did present, but what would be very important and what we have seen for Zambia is that if you want to be helped, first of all, as a country, you must be prepared to take your responsibility so that what is coming to supplement what you are already doing. One of the issues that obviously we need to do, like I told you from the beginning, that we had infrastructure development as one of the causes of this. And now we are talking about some public investment planning that probably if we had effective public investment planning to maximize the gains from borrowing, probably we could have the investment that was coming as a result of that, and the return on that investment would have been able to service some of the debt. And as Joan has said, we have recently launched the inaugural Public Investment Management Strategy and Public Investment Plan for the 2023, and this is supporting our debt, our public investment management accordingly. The other thing is the issue of updating and reviewing the legislation that relates to debt. In Zambia, the Loans and Guarantees Authorization Act that we depended on all along was one that was enacted in 1969. And you can imagine from 1969, we had not I can update you now that we have managed to come up with the new Public Debt Management Act in 2022. And in this Public Debt Management Act, some of the proposals or some of the provisions, we have increased the oversight oversight of debt management by the National Assembly. And we are required, as Joan presented, to publish every year. We go to Parliament and submit an annual borrowing plan that basically explains to the National Assembly and through the National Assembly to the people of Zambia what we intend to borrow, how much we intend to borrow, and the terms on which we borrow. We have also gone further and provided in our Debt Act that on a quarterly basis, we do a reconciliation and publish the debt status on a quarterly basis. How much have, what is the stock of our debt? How much have we serviced? How much have we borrowed? And the terms under which we have done that. Aside that, we have also undertaken some reforms. Obviously, when we talk about fiscal consolidation, we are talking about how can we rationalize our expenditure to make sure that we prioritize the relevant expenditures. But beyond that, how can we make sure that we enhance our domestic resource mobilization so that we can have more resources coming from revenues and therefore reduce the amount with which to support the budget from the borrowing. And as a result of that, obviously, our expectations and given the stage at which we are in terms of our debt restructuring discussions, we obviously expect that we are going to conclude this discussion shortly, and therefore this from the heavy debt servicing that we are supposed to be undertaking. But beyond that is that this is going to improve our credit rating, and therefore we are going to see foreign investment coming into the country. And obviously, Zambia will be a reference point for most of the countries to learn lessons on how to restructure the debt. Let me end here, and if there are any comments, I will be able to come in again. Thank you very much.
Thank you very much, Mr. Manda Hendi. That was very, very elaborate and very interesting. So I think we can open up the floor for questions and comments and reactions from participants. And then I will also read the questions that are in the chat box to the panelists. So anybody who wants to go first? Please put up your hand, raise your hand.
Probably I can answer one question. There is a question on what is the status of resubmission of bondholders. So like I indicated in the presentation, we submitted a revised proposal. I think it was about 17th of November when the official creditor committee looked at the revised proposal, and from the official creditor committee's perspective, was that the bondholders needed to give a bit more concession beyond what they had given. And obviously, because we had run out of time, we needed to make sure, because we had restricted the bondholders in accordance with the international or market rules, we had obviously to cleanse so that they can be able to come out of that restriction. We have also still signed the non-disclosure agreements, and we are still discussing. One of the issues that we are discussing with the Official Creditor Committee Secretariat is the issue of this comparability of treatment. As at now, and obviously when we had the feedback from the meeting that the Official Creditor Committee had, it was a question of what does this comparability of treatment mean, and what concessions, and this is the question we ask, what concessions, to what extent should the bondholders give more concession in order for it to fit within the comparability of treatment? Of course, when you understand the comparability of treatment, it will not mean same treatment, but it will be different treatment. And when we put the model and we say, if everyone else was to give us the same treatment like the Official Creditor Committees have given us, would we be able to fit into the parameters, the DSA parameters? And obviously that will show us that we'll be able to base the DSA parameters. It means that different supporters should be, or different creditors who have to give us different treatment. Some of them obviously extended maturities, reduced interest rates. Some of them, like the bondholders, came with a proposal of a haircut where they give the actual nominal haircut, and probably the maturities not extended to that. Some of them, the private sectors, will they come at the bondholder, or will they come at the Official Creditor Committee terms, or will they come at a mixture of those in order to fit in? And obviously, one of the issues that we are doing now is to say, if we have got an agreement with the official creditors, what type of an agreement would we have with the bondholders that would be able to give us the DSA parameters not vested throughout the program and beyond that? And therefore, what type of concessions would the private sector come in order for us to be compatible with the DSA parameters? So we need to recalibrate that, and we are discussing with the IMF, we are discussing with the Official Creditor Committee Secretariat, and we are discussing with the bondholders to make sure that we have that comparability of treatment that will be accepted. The other question that is coming here is the private creditors included in the restructuring of Zambian case. Yes, we have got three categories. If I can simplify it further, we have got the official creditor committees, we have got the bondholders who are private creditors, and we have got specific private creditors like some of the banks that have been coming. So all of them are included in the debt restructuring. But the local debt is not included for Zambia in the restructuring. And the argument that we have put for not including the local debt is that we have from 1993 been trying to establish the domestic market from which we should be able to have support for our budget support. And the question is, should we be able to crush this domestic market that we have since 1993 been building, or should we allow this domestic market to be built, to be established, so that we can be able to finance? And our argument was that we should allow the domestic market to be built, and therefore we agreed that the domestic debt shall not be included in the debt restructuring. Probably the last one is, how can transparency be enhanced in lending arrangements between African sovereigns and creditor countries particularly? And this is one of the issues that we have been discussing. And I think Japan has been leading in the discussion of this. can we be able to improve transparency in the terms on which the lending is done? In some cases, and in Africa in particular, is that sometimes the terms that we get some of these loans are very, very, very harsh. And sometimes it's the lack of capacity in the sovereign states to be able to negotiate better terms. But if there is transparency, there should be accountability, and everyone will be aware because there will be some name and shame sort of arrangement. And I think Japan has been spearheading this, and we say we support the proposal that there should be transparency, not only from the debtor countries, but from the creditor countries, so that everyone knows at what cost we are getting some of this money that we are borrowing, and we can be able to do that assessment. Probably let me end here, and I can ask my colleagues to be able to respond if there's any other comments that they want to respond to. Thank you very much.
Thank you so much, Mr. Lubasi. I understand John is leaving early. Can you confirm that? And if that's the case, then we can ask some of the questions for him, and then he can then leave.
No, I am staying. Sorry, I am staying till the end of session 2.
Okay, all right then. So we can go to session 2. And can I invite my colleagues? Anthony, you want to go first, or is it Kalayo going first?
I'll go first, George.
Thanks. Good morning, Anthony. So proceed.
Morning. Thank you.
Okay. Thanks.
Okay, so let me just share the my screen with the presentation. I hope I have the rights to.
Yes, you have. You can share.
Share. Let me know if you see the presentation.
Yeah, we can see. Yeah.
Okay, thank you. I'll just put it in the presentation mode so it's clear to everybody. Okay, so we'll be very quick. This is a build-up to what we've just heard of the country case studies on the sustainability, conditions in the three countries we've just listened to, and it's good to appreciate what the Secretary to the Treasury has just highlighted on the case of Zambia, and also prior to that, the conditions in Mozambique and Angola. So what we have here is more of a broader Africa-wide picture, and what we see with a bird's eye view from where we stand as the bank. Of course, this picture that we'll be painting may mask some of the country-level opportunities, country-level policy initiatives, country-level challenges that we've just listened to in the discussion that we have just listened to. So the outline is shared on the screen. So we quickly look at the dynamics and composition of Africa's debt currently. What are we seeing as the main growing debt vulnerabilities, and how do we make public debt useful for investment and growth so that we can generate resources that will help us finance the repayments in debt. And then my colleague Kalayo will look at some of the policies and strategies that will be helpful to reduce Africa's debt burden.
Sorry, sir,
some
can
of
you
which
hear us?
you already heard
Can you hear us, please?
in the discussions from our renowned policymakers present on this scope. So pretty much the story about Africa's debt is by now fully well known, that we have seen a very drastic sharp increase in the debt to GDP ratio from about 36% to 71% up to the time of the pandemic in 2020. In 2021 and last year, we saw a slight decline, but this is generally arising from the recovery in GDP growth post-pandemic, but also in some instances, the temporary relief that was received in many of the countries, and allowed them to liquidate some of the outstanding debt. By the projection we see, and because of the overlapping shocks that we have experienced over the past 2 to 3 years, some of which are still have their lingering effects, is that the debt vulnerabilities really have increased, and we anticipate that the debt to GDP ratio will remain elevated both in the medium to long term. The chapter here just highlights some of the country level situation, and you see in a number of countries that their debt to GDP ratio is above the median for Africa, which essentially speaks to the issue that we talked about. But crucially, we see that it varies across different resource endowments. In some cases, it's much higher than it is, depending on the resource intensity for each of these countries. But we see many countries, both in other non-resource and the other resource-intensive countries, have their debt to GDP ratio much higher than the median level, which essentially also could speak to,
I think he's not hearing us. Maybe,
some of the vulnerabilities that we have seen in these countries, much less.
Can you hear us now? Hello, sir, Anthony?
Okay, am I too fast?
No, are you hearing us? We are not seeing the PowerPoint.
What's the challenge? Sorry?
We are not seeing the PowerPoint.
Oh, you're not seeing the PowerPoint? Oh, that's strange. Let me share again. I thought maybe they dropped it.
And when we were...
Let me know if you see it now.
Yes, now it's perfect. Yes, thank you.
Okay. It probably was dropped for some unknown reason. Sorry about that. Yes, so as you also heard from the previous presentation, as well as the interventions from the policymakers, we've seen a growing shift towards the high-cost borrowing, with external debt taking up a large proportion of many of these countries' debt, and crucially, we are seeing many countries taking on commercial debt, be it in bonds, treasury bills, and other forms of private borrowing. In here, in percent of total external debt, we see that private creditors, the share of private creditors has been increasing gradually from around 2008-9, just after the global financial crisis, and it represents a little over 40%, whereas the bilateral creditors, it has shrunk. And you see that the main reason why we're seeing this shift towards private creditors is primarily maybe because there has been less resource support from bilateral creditors, and this has been taken over by the increase in private lending. But again, in many countries, and you saw the example that was shown for Zambia, for instance, that there is also an increased share of domestic borrowing by African countries. And I think much of this was also precipitated by the need to finance spending pressures arising from the COVID-19 pandemic, which, of course, as you know, limited countries' recourse to external debt, but many of them had to resort to domestic markets in order to bridge the financing gaps that was precipitated by the spending needs to support countries, to support households and firms that were hit by the COVID-19 pandemic. A quick look at some of the emerging debt vulnerabilities that we are seeing. You see that a number of countries are now significantly at a very high risk or already in risk of debt distress. As at mid this year, we saw that 11 in low-income countries globally were already in debt distress, and 9 of those were in Africa. And also about 25 low-income countries were at high risk of debt distress, and half of those were again in Africa. And we see that of those at moderate risk of debt distress, 17 of the 25 were in Africa. So there is an increasing number of countries that are already really struggling with the high debt burden, which highlights the key challenges that we saw in the first presentation relating to increasing risks of debt sustainability. And we're also seeing that many debt-distressed African countries face a huge burden in terms of debt service. And this is, of course, not surprising, because if a country is already struggling to pay its debt, it has high debt ratios, naturally, you would expect these countries to struggle with debt service. And a large proportion of their revenues are now being devoted to debt servicing their debt. Those in countries, those are already in debt distress, at least 17% of their revenues is being devoted to servicing their debt, and we see around 11 or so percent of revenues for those countries that are in high debt distress. The challenge is not only on revenues, of course. It translates to overall size of the economies as well, as you can see on the right-hand panel of the presentation. And because of increased indebtedness, because of the rising need for more borrowing, huge financing needs that we see, but also because of the global and regional economic conditions, tightening of global financial conditions, we see that debt service payments over the medium term are likely to be much, much higher across the continent. And you see in Angola, for instance, that up to about, I think this should be in million, about $7 billion will be used for future debt service payments. Across the continent, it will be around 27 billion in 2025, and it's been building up over time, which essentially speaks to the rising challenge that until we grow our economies more strongly, we generate more resources domestically, the rise in debt service payments will increasingly shrink our budgets and compound the current problem of limited fiscal space to channel into social and other productive sectors. And with the rising climate financing challenges that we have encountered, as we at the bank have projected that about 2.7 billion will be required from now until 2030 to finance climate needs. You could see that it will become increasingly challenging, and especially because countries are having to borrow in order to finance even climate related needs, rather than resort to international support from, for instance, the $100 billion commitment that has been committed at the Paris Agreement. So with the climate finance needs increasing, and as we have seen, much of what countries spend on financing is from debt, it will be very, very difficult for countries to take on any additional debt in order for them to meet the climate financing needs. When there are other more pressing social and economic needs that countries probably prioritize over climate adaptation or mitigation measures. But then we have to realize that much of the debt that has been accumulated over time has been towards meeting a recurrent expenditure, which does not give a good scenario or opportunities for future growth and investment that will generate own resources to self-liquidate the debt that we're accumulating now. And it has implications for economic growth in the future and for future generations as well. We need to probably step back and check where we are spending these resources. Of course, we see infrastructure expenditures, infrastructure projects emerging across the continent. But from the data that we are seeing, maybe much of what is being spent on those infrastructure projects is not fully reflected in the numbers of data that we are seeing here. Instead, what we see is that there is an increasing shift towards the recurrent expenditure, and you could see from 2020 to last year, the share of recurrent expenditures increased. Part of this is really COVID related, because many countries use those resources to meet the COVID financing needs, which did not reflect much on project financing, but more on palliative measures to support households and firms that were affected by the pandemic. And so from the literature, of course, it's very clear that high indebtedness takes away from the benefits of growth, benefits of investment, because public debt really is kind of presents itself as a tax on investment, on growth. And so we must now start to rethink our model of how we use public debt, because if we do not invest these resources in high-yielding projects, which will fuel future economic development, I think we'll remain trapped in the high debt trajectory. And from experience, we have seen that public investment in low-income countries, especially, has the potential to yield higher social returns compared to private investment. I think we may have to start thinking on how to invest some of these resources in building human capital, building, supporting education, supporting health, in order to strengthen both the physical as well as the human capital development in the region. This chart here just gives you, if you like, kind of relationship between debt service cost and GDP per capita growth in selected countries. And you would see that there is that negative correlation in these two important indicators, basically confirming what I said from the literature, that we see huge debt burdens acts as a tax on growth, and it takes away from opportunities for future growth when the resources are not efficiently and prudently deployed to create opportunities for future investment.
Thank you, Anthony.
Although we have seen an increase in public investment arising from debt-financed projects, we see that Africa still lags other emerging economies. And there is a disparity really between public investment we are seeing and saving, which basically creates, it reinforces the need for future debt financing. And the efficiency of this investment is in Africa has been low compared to others. And yet we think that more efficient investment is useful for future growth. It is important, therefore, that we need to prioritize progressive expenditures and naturally, as you heard in the earlier discussions, strengthen domestic resource mobilization. But some of these things will be highlighted in the second part of this presentation. So I think we just need to step back a little bit. I know that there is limited financing coming from domestic resources, but until we see that our current use of debt is deployed in critical investments, we will not be able to see much of that growth that we seek to derive from this. And the COVID, of course, has accentuated this problem. So let me just underscore the point that debt can indeed stimulate investment, but it has to be properly targeted, it has to be efficient, and it has to be directed in those productive sectors that will generate stronger impact on the economy. My colleague will take us through some of the strategies that we have seen that can be deployed to reduce Africa's debt. Of course, this, as I said, this is an Africa-wide perspective, and we have heard from country level strategies that are being deployed to deal with this problem. Kalayu?
Okay, thank you, Anthony, and thank you, moderator, George. So basically, building on Anthony's presentation, I'm going to talk about, some of the public policies and strategies that will help, to reduce Africa's debt burden, and also, like Anthony indicated, how we use debt for financing sustainable development. Now, I think the first thing that we need to look at is the quality of institutions and effectiveness of government in Africa. The bank's country policy and institutional assessment indicates that Africa is lower than other regions when it comes to institutional capacity and effectiveness of the public sector. The CPIA helps us to do an assessment on the quality of institutions, the public administration, in terms of policy making, as well as the quality of the public finance management, economic management, and also efficiency in revenue mobilization. So according to the CPIA, as I indicated earlier, that the trajectory has not been good as such. The quality of public institutions in the continent has shown that either it's on a slow progress or in some extent a downward trajectory over the years. Next slide, please. Now, how do we support countries to borrow more sustainably? I think we've all agreed that debt remains a key instrument to finance development. However, there are issues that we need to look at for public debt to be more sustainable. And the first thing is we need to look at the nexus between public debt, economic growth, and governance. And I think improving governance system and institutions will be critical for the efficient use of debt to generate economic growth and have fiscal surplus. So we need to continue to use debt to finance high economic return investments in infrastructure. I think this is well discussed in the previous presentations as well. Now, the other issue that we need to consider is also, the country's debt carrying capacity, which we need to look at both in terms of the quality of the debt management capacity and also some of the macro economic fundamentals, including economic growth, inflation, the fiscal and monetary policy, as well as the global economic environments is something that we also need to look into, given our recent experience on the global shock, such as COVID and the conflict in Russia and other parts of the continent. Now, the issue about sustainable borrowing is also related to the debt management capacity and capability of our member countries. And I think this is something that was discussed in more detail in the first session of presentation by Joan, as well as the distinguished panelists. So we need to make sure that we need to have a strong debt management office, as well as an oversight bodies that would ensure the way debt has been used in public investment in the specific countries. Next slide, please. Now, I think one of the key policy instruments or strategy that we need to use for sustainable debt management is efforts to enhance domestic resource mobilization, because this is very critical. And I think in this regard, we know that domestic resource mobilization in many African countries remains largely, oil and commodity dependent, which is volatile and also lags, other regions. So overall, if you look at the total government revenue, at the beginning, it increased from 25% of the GDP in 2000 to 31% in 2008, and this is mainly due to the commodity boom in the 2000s. It also declined in the aftermath of the global financial crisis to about 17.5% in 2016, reflecting the 2014 and 15 oil price decline. And of course, in the aftermath of the COVID-19 pandemic, the share of government revenue in GDP has averaged around 18% between 2020 and 2022. So member states have to make effort to strengthen, the tax administration capacity to improve domestic revenue mobilization, but also there need to be also effort to strengthen, the public finance management system, to strengthen, the budget execution, and also, we have to also focus on leveraging on technology to improve public finance management, including, budget execution and cash management systems of the countries. Next slide, please. Now, I think the other critical reform area is also to reform in some cases, the constitutional and the institutional framework that are critical for sustainable debt management. And I think in this case, we've heard from Zambia panelists about the effort that has gone in place to ensure sustainability of the public debt management. So there needs to be a legal framework that enhance debt management transparency, including, the need to publish public debt reports and real-time information on implicit guarantees and contingent liability. There needs to be also access to publication of public debt obligations and institutionalization of the publication of debt bulletins in those countries where it needs to improve in terms of debt management and debt transparency. And of course, we also need to put in place a framework, to contain physical risk from undisclosed SOE, the state-owned enterprise debts and hidden debts from non-traditional lenders. And I also issue about capacity, and I think I will come to that in terms of what the African Development Bank is doing to support member countries to strengthen the capacity. Next slide, please. So some of the initiatives implemented by the African Development Bank could be, I think, seen in 5 different components. First, the bank is enhancing its policy dialogue aimed at addressing Africa's debt vulnerability. This includes through partnership and coordination with development partners to take forward some of the debt relief initiatives and discussions that are happening at the global and continental level. We also need to support, and the bank has some initiatives that support member states, to exploit opportunities for new, innovative, and low-risk financing instruments and risk mitigation measures. And there are some, financial products in the bank, and also supporting member states to develop similar financial product risk mitigation measures in this field. The bank has also developed a medium-term debt management action plan, which sets out how the bank intends to support member states, which is also guided by the bank-wide strategy for economic governance in Africa. There are also some initiatives where the bank provides capacity building and training and platform for policymakers through the Public Finance Management Academy. Of course, we do also have a sustainable borrowing policy that was approved a couple of years ago, and there are some initiatives there as well. And I think one of our colleagues is connected, who's leading this work on the sustainable borrowing policy, and who will be able to share with us some of the principles and also progress that has been made to date. And of course, the bank is also planning to launch an Africa Debt Managers Network, where we would provide us a platform for experience sharing and learning on debt management issues in the continent. And I think with the regard of domestic resource mobilization, the African Development Bank is providing quite a number of support, both in terms of policy and tax administration capacity building to revenue authorities in the continent, but also working through Pan-African institutions that are mandated to work on tax matters, including the Africa Tax Administration Forum and the African Legal Support Facility, that are also contributing towards enhancing domestic resource mobilization in the continent. The bank has also a strategy to address illicit financial flows. There is a framework in place, and we are working with international and Pan-African institutions, to address illicit financial flow from Africa, which is also, if we have made progress to address this, that would also links to increase domestic resource mobilization in the continent. Next slide, please. Now, I think just to conclude, we would also like to share, some of the bank's perspective on the debt relief initiatives. In particular, I think a need to fast track the G20 command framework for debt restructuring. We've heard from Zambia the progress that has been made, but overall, I think in the continent, progress on the common framework is mixed. So far, we only have Chad and Zambia that have reached agreement with official creditors. I think we've heard the process that they went through and the experience and lessons learned from our distinguished panelists earlier. Of course, Ghana has also submitted a request for debt treatment, and a credit committee has been formed, and the financing assurance were provided in May 2023. that also allows the IMF board to approve its program around May and June. And ADB and other partners are also considering. Of course, actually, the African Development Bank has approved this budget support, to support the initiatives in Ghana. Next slide, please. So I think domestic debt restructuring may become more frequent across the African countries, and will require, a careful management exercise following the discussion with the official creditors. So the next issue is how to restructure the domestic debt. So debt restructuring initiatives will include discussion on domestic debt, as I said. An approach to domestic debt restructuring will depend on the country's circumstances, legal and institutional framework. But we know that domestic debt is treated separately from the external debt. So successful domestic debt restructuring strategy must achieve the required debt restructuring targets with the minimum rate. Next slide, please. So just a concluding remark is that debt relief strategies, initiatives from external sources have not yielded the expected results. As I said earlier, the progress is mixed, but homegrown solution will have to be devised to offset this protracted debt distress in Africa. Next slide. With the growing tight fiscal conditions and domestic resource mobilization will be an imperative, to ensure public debt stability in the continent. And then finally, reform on the constitutional and institutional framework are a prerequisite for sustainable debt management in Africa. I'll stop there. Thank you, and merci beaucoup.
Thank you very much, Kalayo. I think we have reached the end of the presentation. But before I invite the other speakers to respond from Angola and so on, let me invite Dominique to just give us a 1 and 2 minutes comment on sustainable borrowing policy and how that is being implemented within the bank. So Dominique, please, if you're online. Dominique, is Dominique there online? Okay. Well, if Dominique is not connected, I think we can ask our colleagues.
Sorry, I am connected. I had a glitch, but I'm here.
Oh, okay. Go ahead, Dominique.
Okay, so I will give a small overview of the sustainable borrowing policy and explain where we are at this point regarding the policy. So the policy was approved nearly 2 years ago by the board of directors of the bank, and it mirrors to some extent the sustainable development financing policy of the World Bank. The objectives are the same. The objective is to support basically sound debt management through debt transparency, fiscal management, and overall good practice regarding debt management and disclosure. And there's 2 pillars. The first pillar is very similar to the pillar of the World Bank. We have introduced a sustainable agreed policy actions in the area of debt, and it mirrors the sustainable borrowing policy of the World Bank with that regard. The second pillar is about outreach to partners, basically traditional development partners, but also bilateral partners and the private sector. So let me talk now about the agreed policy actions that are part of the first pillar. The agreed policy actions that we call APAs are mandatory for all countries using ADF. So it's all ADF countries and blend countries. We have 3 types of countries at the bank, so that does not target the countries that borrow from the ADB, basically the bank. So according to the policy, every country that is receiving ADF is supposed to agree with the bank on APA's agreed policy actions in areas of debt management, debt transparency, and fiscal sustainability. And those actions have to be measurable and time-bound on a horizon of 3 years maximum. And the objective is to support the country in basically making reforms that make sense to support the broad objective of debt sustainability. So now the difference that we have with the World Bank is that those measures do not impact ADF resource allocation directly. The World Bank basically has measures, similar measures, but if the country does not meet them, and those measures are over 12 months, there is a cut of 10 or 20% of the next basically allocation of the World Bank. And it's called, it's a cut that can be recovered, but depending on the country situation, there is a real cut if those measures are not met. We didn't go this route because we didn't want to give an incentive for countries to go to the market, but rather we have embedded our policy with incentives in as far as countries respecting the agreed policy actions will be rewarded in many ways. First, that will positively impact the country policy and institutional assessment, the CPIA, which is taken into account to basically factor in the country allocation for ADF. We also have embedded basically the agreed policy actions in how we consider countries to use ADB resources on an exceptional basis, so that's for ADF countries. We also take that account in the graduation prospects of the countries, and also we have launched more recently the moderately concessional loan, which is still a project of the bank, but that will allow basically some countries to have access to further ADF resources through that will come from the market. And so those measures will be used. So right now, in terms of policy implementation, we are finalizing the guidelines to ensure that the agreed policy actions will be clearly defined. And once those guidelines are approved by the president, we'll unroll them for all the ADF countries. There has been some basically missions done in selected ADF countries in high risk of debt distress for the most part. Mozambique, South Sudan, Gambia, Ghana, Kenya, where there's been pilot APAs as a learning purpose. And we have used basically the learnings of those pilot APAs to develop the guidelines. So I hope I was not too long. Thank you.
Thank you very much, Dominique. There was a question on Angola, and it was written in the chat, an Angola representative. Dr. Teixeira, if you probably want to repeat the answer you provided, if you're still online, right? You can give us the answer so that everybody can hear your response. Thank you.
Yeah. Just one second. Yeah. Muito obrigado. De facto, relativamente a Angola, foram feitas duas questões. Uma relativamente ao benefício que a Angola teve relativamente ao exercício de tão passivos quando da emissão que fez em 2022, a emissão de 1,7 mil milhões de dólares, em que nós recompramos 700 milhões da dívida que vencia em 2025. Nossa perspectiva, quando fizemos essa operação, foi no sentido de antecipar potenciais pressões de tesouraria que poderiam vir a ocorrer em 2025. Obviamente, quando fizemos essa abordagem, houve sempre alguma controvérsia. Por que é que não fazer essa emissão, utilizar o dinheiro para consumo corrente do orçamento, não? Em vez de antecipar algo que vai acontecer daqui a 2, 3 anos. A verdade é que Isso é um exemplo claro da necessidade de nós, enquanto países africanos, sermos mais ativos na gestão do passivo, né? É impedir é trabalhar na antecipação, impedir que sejamos surpreendidos com as alterações, porque o contexto mundial vai sempre alterar e nós, enquanto gestores de dívida, temos que tentar sempre antecipar cenários mais gravosos. A outra pergunta que nos foi feita foi relativamente à economia, à vulnerabilidade da economia angolana pelo seu grau de exposição ao setor petrolífero, não é? E que políticas é que o governo está a implementar para efetivamente mitigar esse foco de vulnerabilidade. A esse nível, nós temos estado a adotar algumas medidas para mitigar essa situação. Mas a resposta é basicamente que tudo tem que ver com o processo de diversificação. Nós temos estado a fazer investimentos em infraestruturas no sentido de desbloquear o potencial da nossa economia e, por outro lado, a nossa expectativa é que, com a consolidação de toda a estratégia do ponto de vista da dívida, de endividamento público, nós poderemos criar condições para que Angola tenha um ambiente de negócios mais propício para o investimento do setor privado. Nós queremos criar condições para que o Estado esteja com as suas finanças mais estabilizadas, com a estabilização das finanças públicas, diminuir o efeito crowding out e permitir que o setor financeiro financie efetivamente o setor privado. E por essa via desbloquear crescimento económico. Nós temos estado a fazer de forma antecipada algumas estruturas com a Banca Nacional, mas com um enfoque, uma ênfase para o setor da agricultura e toda a sua cadeia de valor. O objetivo é permitir que Angola, a agricultura de Angola se torne cada vez mais forte e por essa via nós conseguimos normalizar o efeito sobre o nível de inflação, que está uma boa parte da nossa inflação está correlacionada com o facto de Angola ainda importar uma franja muito considerável, significante da comida que é consumida no país. Em termos gerais, eram as notas que eu gostaria de partilhar. Obrigado.
All right, thank you very much, Dr. Axiera. I'm going to ask the panelists to respond to one or two questions before we can come towards the end of the program. So let me ask the other panelists, and they can respond. And then I can ask you, Dominique. I see you are Anissa. So the first question that I would like to ask the panelists, and they can choose. I think we have Joanne, we have Kalai, we have Anthony. What capacity needs can we identify on debt sustainability management across the African continent, given your experiences? So you can answer in any order. It can be Anthony first, it can be Joanne. So Anthony.
Hello, George. I'm not too sure I picked your question.
The question was, what capacity needs can we identify on debt sustainability management across the African continent?
You're too faint, George.
Can you hear me? You can't hear me.
Yeah, but you're too faint, please.
Can you hear me? I don't know what's wrong with my mic. You can't hear me. Can you hear me now?
Yeah, please go ahead.
Okay, I'm saying, what capacity needs can we identify on debt sustainability management across the African continent? If you could walk us through, if you have any sense of the kind of capacity needs that we need to work on.
Okay. I think in my view, we may have to rely on the country experiences on what they are lacking in terms of where they need the bank support. But from where I stand, what we have seen in many countries is that there is very little capacity in terms of identifying the areas of strengthening data collection, monitoring on the use of debt, but also where this debt is being contracted by which agencies in countries where some of the debt is debt contraction is not centralized at the Ministry of Finance or designated agency. That's one. But the other point is, I think it's important that we build capacity in strengthening the surveillance of the channels through which this debt is flowing to individual projects, because some of these projects are not mapped to specific areas of what this debt would have been contracted, and as a result, we see that it ends up in projects or areas where the need for investment is probably less of a priority than what the government should be doing. And of course, we have challenges of debt transparency, statistics, but even in just the debt sustainability analysis, as you had heard in the earlier presentation, that many of these countries rely on the information that is provided by the IMF. In-country assessment is not there, and I think that's a strong entry point for the bank's work, and our own modeling work, including the model that we have built that incorporates investment and growth in debt sustainability analysis, I think would be very useful. That model, as we speak, is being piloted in Zimbabwe, and there's been a strong demand for it to be shared with other countries, so that it's clear they see where the resources that are being channeled to, whether it's in projects, investment areas that have a high return to build the revenue stream that will be used to repay this debt. But it's also important that we need to collaborate with the institutions like MEFMI, where Jacob is, and others that are working with member countries directly in building capacity, both in terms of debt sustainability analysis, but as well as in other areas of improving debt management. These are some of the issues that I can think of, but I'm sure our colleagues in the ECGF, as well as the people like Jacob, who is on the call now, could possibly highlight areas where they're engaging directly with debt managers and see what are the current challenges that they're encountering in terms of impacting that capacity.
Thank you very much. I think that weaves in very nicely. So let me ask Jacob to come in very quickly. We are running behind time, and so Jacob, if you could keep your answer very short. Thank you, Jacob from MEFMI.
Thank you very much, and thank you, ADB, and everyone behind this webinar. As MEFMI, we are happy to be part of this discussion, very timely. But I think Anthony has quite dealt with this question very well. I could only maybe add in general terms. I think the gaps that we see largely our technical expertise. I think we see this is common across the countries. Of course, we do recognize that at least speaking in terms of our region, the Eastern and Southern Africa, we don't see the countries as homogeneous as far as the debt situation is concerned. I think there are specific and peculiar gaps in the countries, but technical expertise is one that generally we see across the countries. And as MEFMI, this is one area that we strongly support the countries to build capacity in the macro modeling, fiscal analysis, debt sustainability frameworks, and risk assessment methodologies. We do this in partnership largely with the IMF and World Bank under the debt management facility. We believe that this is the cornerstone of any intervention that would help build debt sustainability in the countries. Of course, the various other gaps we know that Anton has touched on, issues of data. We work with the countries to build their debt databases by improving how they use the debt recording systems developed by the Commonwealth Secretariat and UNCTAD, and the various other interventions around the risks assessment and mitigation frameworks, implementation issues, hand-holding the countries to run through with their debt management operations. For MEFME, I think we take the view that capacity building is not a short-term undertaking. So we've been in this area for quite a long time, and we see the results come that way. I think interventions that project kind of model do not help the countries because they get back into the challenges. So we have a long-term view. We usually do this through a 5-year program, but we implement through 1-year interventions frameworks that we review. To take into account developments, I think the first presentation showed how rapidly the situation can change and outcomes can really change from the initial assumptions. So at MEFME, we try to deal with that by having these annual frameworks to intervene. So in the interest of time, let me leave it at that, but thank you for the opportunity.
Thank you very much, Jacob. So let me ask Dixon Omoni, I'm told he's online. How can citizens' engagement be enhanced to support sustainable debt management?
Thank you. I had just sent an email requesting to drop off because I have to run to another meeting. But just a short one on the previous question before I come to the question of citizens. When we think about the whole debate around debt and even thinking through how the conversation has been structured and where the emphasis has been, I think there is quite a lot of capacity within the executive branches in the various countries that are represented here and generally across Africa. That somewhere within the Ministry of Finance, the Treasury and so on and so forth, is where a lot of conversations around debt management take place. And so for me, I think that when you think about capacity needs, it's also important to think about what other institutions outside of the executive branch need to be more involved, more engaged in debt management. And from where I sit, I work for the National Democratic Institute. Our approach is really to think about how one can strengthen accountability networks with a specific focus on the role of parliaments and civil society, which is your question as well. And so I think that trying to invest a bit more in the capacity of parliament to play a role in debt management is very important. Whether in the context of specifically loan agreements, and the ability to scrutinize those, but whether more generally to be more proactive through the budget cycle and to see how that is part of the broader, prioritization of needs, spending needs, and then weighing that against where the revenues are coming from. And so, if you think about the individual member of parliament, there is quite some issue there about the ability to comprehend the complex challenges generally that pertain to issues around debt management. But you could also think about specific institutions within parliament, the committees that are typically charged with looking at issues of public finance management, the Public Accounts Committee, where you have, like in Kenya now, specific committees of parliament vested with the responsibility of looking at issues around debt. How does one build the capacity to be more effectively engaged? How do you build sort of those peripheral institutions that are also very critical, the parliamentary budget offices, so that they're also able to provide support to members of parliament? I think is very, very important. I had as well, I think, in one of the previous presenters talk about looking at the legal sort of frameworks that govern this type of issues. And one of the things there, and it also touches on the question you've asked, potentially what role can citizens and civil society play, is advocating for greater transparency. Not just in the context of, and some points of emphasis there, completeness of data around debt, and trying to make sure that covers not just external debt, where I think there's been a lot of focus, but also domestic debt and guarantees. Trying to make sure that that does not only reflect debt owned by certain governments, but also state-owned enterprises and so on and so forth is very, very important. And so to your question, therefore, I think there's a lot that civil society as a representative of citizens can do to try and advocate for greater transparency, to try and make sure that countries are trying to adopt legal framework and norms that reflect commitment to these transparencies. We have done some work alongside open government partnerships, which I think is very useful to the extent to which it is helping governments to include commitments around public debt transparency in their OGP action plans. So Malawi is one of those countries within the region that has a commitment now on public debt transparency in their OGP National Action Plan. Kenya is thinking through the same as well. And I think that's a very positive role that citizens in general are playing. And then because of time, let me just say that trying to make sure that, and as I've intuited this, that the debt debate is not just a preserve of the executive branch, but also there's public discourse around issues around public debt management. How are citizens who are the ones who suffer the disproportionate effects of any challenges in their debt repayments, and how trade-offs in social spending and so on and so forth impact them, become part of these particular debates. I think there's a very important role there for civil society. So I'll stop there because of time, but I do think this is a very important conversation. And for me, overall, I will leave with a suggestion that, let's try and broaden the discussion and debate. Let's try and make sure there is more actors involved so that we create a nearly system of accountability when you're talking about debt, and not leave it to, technocrats and economists within executive branches. Over.
Thank you, Dixon. I think let me take this. Yeah, let me take this opportunity to ask Ms. George Mensa to just answer one question, and then we can go into the chat box where for a number of Q&A also. But so the question to you, Madam, is how can the current global debt architecture be reformed to help resolve the debt situation of African countries?
Thank you very much. Can you all hear me okay?
That's clear. We can even see your face. So.
All right. All right, thank you. So, yeah, thank you for the opportunity, and greetings from the Commonwealth Secretariat. So, with regards to restructuring the global debt architecture, I think the current architecture must be reformed to offer prompt and very comprehensive debt relief to countries. And there are three key areas I'd like to emphasize. One is in debt contracts, the other is in debt transparency, which has been highlighted and discussed broadly, the role of creditors, and strengthening policy frameworks. So with debt contracts, I would like to emphasize the need to strengthen contractual provisions in debt. And we've seen that over the years, a lot of work has been done in strengthening the contractual provisions, but there's more to be done, especially if you look at the issue of incorporating enhanced CNS, which is comparative action, CACs, comparative action clauses in debt contracts. And you realize that this has supported countries to restructure their debt. If we look at the cases of bondholders in bond issuances where this has been enhanced, it speeds up the process of debt restructuring. And if you look to Africa, most of our borrowing hasn't got those enhanced clauses in there. We can also look at debt pause clauses, which have been introduced in some contracts to ensure that when countries run into climate disasters, there is something to fall on, there's a clause to fall on, which can be triggered to stop repayments, give them a momentarily relief, and then going forward, they can restructure themselves and reservice their debt. Also, we can talk of the issue of enhancing debt transparency, and this is important for both creditors and for borrowers because, as we've discussed extensively by most of the panelists, where there isn't transparency in debt processes, one, debtor countries can't make informed decisions, and then two, also the creditors wouldn't have good information based on which they can take investment decisions or even to support restructuring. So this becomes very important. We have also emphasized the role of creditors, and over here, Zambia talked extensively on how all creditors need to play their part. So we've seen a lot of work being done by multilateral institutions, but there's also the call for the private sector to get on board. He emphasized a lot about comparative treatment, and this has to be done with collaboration from both multilateral and private sector creditors. And then also strengthening policy frameworks is very critical to support restructuring in Ghana. And this would emphasize what type of debt has to be restructured, when it has to be restructured, and how it has to be restructured. And this should, for countries, it should focus mostly on debt, because external is really sometimes not led by the countries themselves. But then on the issue of domestic debt, is importantly or essentially, countries must have a rethink about what policy frameworks would support restructuring in this area. I liked the contribution from Zambia, where they said they had a thorough think about their domestic debt market and thought this wasn't time to touch the domestic market. But then is there a policy framework that surrounds it that will guide them that at this point, this is the action that needs to be done? And I think that is what we have to do. Ghana has done domestic restructuring. What framework supported it? What is the long-term view? How are they going to support the markets going forward? Because it does cause a bit of disruptions to the market, I would be honest, but then what is the strategy going forward? So I think all these three areas, all these four areas essentially must be strengthened by countries and creditors collaboratively to ensure that the global debt architecture is strengthened to support countries in times of distress. Thank you.
Thank you so much, Difia, if I might call you. And yes, that was very, very, very elaborate and very interesting. So we have one or two questions again online. I've seen Kalayo responding as well. So let me just read one or two of them, and then I think we can close on this. So the question from Yusuf: how can transparency be enhanced in lending arrangements between African sovereigns and creditors, particularly emerging by lenders and private creditors? What strategies can be used to employ to ensure transparency and accountability? So I can give that to Joanne, if you're still here. Maybe you can respond to that. Joanne? No. We can't hear you. I think you're on mute.
No, I'm sorry. I'm afraid I'm having connectivity issues.
Did you hear the question?
No, George. I was wondering if you could address the question to another panelist, okay, because I'm having connectivity issues. Sorry for that.
Okay, Kalayo, the question on transparency and accountability, please.
If I could touch on that briefly, I think to enhance transparency, there are two key issues to look at: transparency in the loan contracting process and transparency in reporting. And I think for countries, countries must adopt a standard reporting mechanism. There's been a lot of work that has been done. The World Bank, the IMF, the Commonwealth Secretariat, and several other partners have try to strengthen or streamline reporting standards to support member countries in effectively reporting their debts comprehensively. And so 3 key areas countries could look into is ensuring that they report the debt comprehensively. And by comprehensively, you're looking at central government debt and all other contingent liabilities, because we realize that in countries there's a lot of emphasis on reporting central government debt, but then not much is done when it comes to, or not much records are kept when it comes to contingent liability management. And sometimes it's these contingent liabilities that crystallize on the debt and do cause a lot of trouble for countries. So it's important to report debts very comprehensively. We also look at the issue of timeliness of reporting, because your report is as good as when it is released, actually, because the creditors, as well as even policymakers, even debt officers, and the Ministry of Finance as a whole is looking at these reports to make informed decisions. So if they are not as forthcoming or they don't come in at a good time, then the decision will be taken without an informed data that supports the decision. There's also the issue of accuracy, and beyond comprehensiveness, countries should be should strive to be very accurate as possible in debt reporting. And by this, that's where we do a lot of work to ensure that there are debt management systems that are helping countries to actually keep data comprehensively and as accurately as possible. That has good validations to support ensuring that countries are reporting as accurately as possible. And also the other area I would like to emphasize is the issue of accessibility. That is making these reports, after you've published, you've done them or produced them, making it widely available. So you go into most countries and they do compile some form of reports, but then it's not available to the public. So it could be within the debt office, it could be within the Ministry of Finance, sometimes up to Parliament level, but then it is not published for the public to get that information and make informed decisions. And by public, it also includes other stakeholders like the creditors, it includes even the central bank, it includes even the citizens, as we've discussed here. And I think in ensuring transparency in debt operations or debt management, we should look at making all these very accessible to all stakeholders involved in ensuring that debt is managed comprehensively, and also ensuring accountability in the processes. So I'd like to contribute and invite any of the other panelists to also chip in. Thanks.
So any other panelists who want to chip in very quickly? I think we have 40 minutes beyond time. It's interesting. Dominique, quickly.
Sim, muito obrigado. Eu só queria responder para o comentário do senhor Teixeira da Angola em relação à dívida pública da Angola e em relação a políticas da dívida sustentável no banco. Eu concordo totalmente na medida de que, para nosso ponto de vista, a dívida pública é boa. E temos alguns casos, especialmente em Moçambique, para onde temos ações de políticas acordadas, agreed policy actions, sobre a qualidade dos investimentos, das inversões. Então, as inversões estão totalmente indispensáveis no país, só que hemos visto que desde muitos anos temos problemas de qualidade da avaliação dos investimentos. Então, estamos tentando apoiar esses países para fazer um pouco melhor. E no segundo plano, eu queria concordar também sobre a necessidade da estratégia para a dívida pública no país. E temos ações e políticas acordadas para nos assegurarmos de que temos uma estratégia da dívida pública sobre muitos anos. Então, muito obrigado.
Thank you, Dominic. Mamoru, you want to advise on how we proceed from here?
Yes, thank you, George. I think the time is not ahead of us. We have to really conclude this webinar. So thank you very much, George, and all the panelists. It was a very productive and effective interventions. Thank you so much. I would like to sorry for this intrusion, but I have to close this session too, and the Q&A session. If you can continue the responding, kindly respond through the Q&A boxes, which you can find some good innovations there. Thank you so much. Then yes, thank you so much. If you can add anything on your response to this quick survey, I would really appreciate for that. Then for closing remarks, I would like to invite Mr. Khaled Ibn Al-Waid Samir Hussain. He's the regional program coordinator of our bank's Southern Areas Coordination Office. Mr. Khaled, could you kindly provide your closing remarks? Thank you.
Thank you very much, Mamoru, George, and colleagues. Dear guests and panelists, as we come to the end of the 5th installment of the African Development Bank's Debt Management webinar series in collaboration with the Government of Japan, I would like to extend my heartfelt gratitude to all participants, esteemed panelists, and collaborators for your invaluable contributions and insights on the lessons on sustainable borrowing and policy implementations. On our side, the challenging state of Africa's sovereign debt landscape underscores the urgency of our discussions. Recent shocks have compounded Africa's debt vulnerabilities, its strained national budgets, and increased debt levels. Despite improving economic conditions, debt burden exceeds pre-pandemic levels still, placing 9 African countries in debt distress, and there are 12 other African countries at high risk at the moment. Sustainable debt management policies, therefore, are paramount to avert any potential crisis. The first panel discussion on sustainable debt management and policies drew insights from Zambia, Angola, and Mozambique. Government representatives shared their experience with a focus on Zambia's debt restructuring process, which was very informative. Key takeaways includes common debt drivers, external shocks, undiversified revenue sources, fragile public finance systems, and all this would need tailored policy solutions as a response. The second panel on bolstering policies for sustainable debt management in Africa explored debt management issues. Mr. Jacob Makandawiri emphasized the need for debt management capacity building to address new risks. Mr. Dixon Omondi stressed the importance of citizen engagement and parliamentary oversight on the process of debt management. And Ms. Bouaki Mensah advocated for more robust approach for development partners to support debt-distressed nations. So this exchange showcased the potential of cross-continental knowledge sharing to address these African challenges. In conclusion, the collective insights shared during the webinar provided a roadmap for enhancing our understanding of the principles and policy directions outlined in the African Development Bank Group Sustainable Borrowing Policy. We have delved into debt dynamics, shared experiences, and derived practical solutions for debt vulnerabilities in Africa. Moving forward, the policy recommendations that will emerge from this fruitful dialogue will be critical in creating a course towards sustainable debt management. The challenges are immense, but so are the opportunities for collaboration and coordination among all key stakeholders. Together, let us draw on these lessons to navigate Africa's debt management landscape. The African Development Bank stands, as always, committed to supporting regional member countries towards achievement of debt sustainability through enhanced fiscal management. We encourage our regional member countries to explore avenues for support, including continued budget support coupled with policy dialogue, and institutional strengthening through technical assistance and knowledge work. I look forward to witnessing the positive impact of our collective efforts as we strive for a financially resilient and sustainable future for Africa. Thank you once again for your unwavering commitment to this vital cause. Thank you very much.